Hi, my name is Andrew Hallam. I'm the author of Millionaire Teacher. I'm a finance columnist and a former personal finance high school teacher. I started investing when I was 19. And by the time I was in my late 30s, I ended up building a $1 million portfolio on a school teacher's salary. I didn't gamble with the money. I didn't borrow big money to invest. I didn't do any kind of day trading. I followed sound economic principles, such as what Warren Buffett would be trying to teach you if you asked him, and what a Nobel Prize winner in economics would be trying to teach you. There's so much bunk out there on the internet in terms of how to make money in the stock market, and I'm hoping that this little series will help to clear things up, give you bite-sized pieces so that you can understand how to invest yourself in the markets. Stock market investing is not like gambling. Unfortunately, many people think it is. But if you have a diversified investment portfolio and you add money to it regularly, you will eventually build wealth. Yes, it will have its ups and its downs, but on aggregate, you are going to grow more and more wealth over time. And that's the most important aspect here. I want to show you the return of the average US stock, just to give you an idea of how much money can be made in the stock market. Let's assume that you invested $3.33 a day, or somebody started to do that way back in 1972. That's not a big commitment. It's a small amount of money. It works out to about $100 a month. Well, if somebody did that from 1972 until March 31st, 2020, they would have actually added about $56,000. That would be a long-term commitment, but the portfolio would have been worth at the end just over $2.6 million. Owning a stock is like owning a piece of a business, whether it's McDonald's, Google, Starbucks. When you own a stock or a piece of that business, those businesses on aggregate increase their earnings. McDonald's will sell more burgers, Starbucks will sell more coffee, and as such, when they increase profits, share prices rise in conjunction with that. They don't always rise linearly directly aligned with that. So sometimes the share price will rise faster than business earnings, sometimes slower than business earnings, but long term, there's generally a direct correlation. Some stocks perform well and others don't. You can see one of the strongest performing stocks from 2004 until 2020 was Apple. So this blue line represents Apple and this red line represents ExxonMobil. ExxonMobil didn't perform as well as Apple did. But picking an individual stock is not as easy as just looking at what's performed well in the past. We have an example here with the same two stocks from 1989 now to 2004. Now the red line, which was the better performing stock, is ExxonMobil. The blue line here represents the poorer performing stock during this time period, and that was Apple. There are millions of professional traders that try to pick winning stocks. This isn't the strategy that I want to try to recommend to you. It takes a lot of time, and you will end up, if you follow instead a economically peer-reviewed, evidence-based investment platform, you will outperform the vast majority of professional traders after fees. I know they try and sell you on things. There might be a guy in his 20s, he's standing in front of his brand new Learjet, and he's trying to tell you that he turned $1,000 into $10 million, and he has the secret, and all you need to do is pay $9.99, and you can follow his secret, and you can also be wealthy. This is entire bunk. What we need to understand is these people have designed these things and these marketing strategies not to make money for you, but to make money from you. I want to show you something different. I'm Andrew Hallam, author of Millionaire Teacher. Please subscribe to this channel, click like, throw in some comments, follow me along with this journey, and I will be able to show you more in bite-sized chunks. Thanks very much. Stay safe.